This strategy I'm about to show you is called an order block in an order block. It is one of the most powerful order block trading strategy you can find in the smart money concept. If you are new to the smart money concept, you may need to know some smart money concept of which I will be explaining to you, such as an order block, break of structure, and a change of character. Let's start with an order block. What exactly is an order block? The word block in transaction simply means a very huge or a massive levels of transactions. So we cannot literally see this when it is happening, because this kind of transactions are only done by the institutions, by big players and market makers that are in the market. This particular strategy works in any financial asset, whether you're trading currencies, whether you're trading cryptocurrency, whether you're trading stocks. So watch and see how to use this particular strategy. So let's define an order block and see how we can see it on a chart. As retail traders, we can only identify them on our chart. So right here, I identified a particular order block. This is a bearish order block. We have two types of order block. We have a bullish order block and a bearish order block. And why do we call them an order block? Look at it. From this level, price moved from this level to this level. The last green candle that printed before this red candle completely engulfed it is known as our bearish order block. Why is it a bearish order block? It is a bearish order block because it was the last green candle that caused this down movement. And then right here we have a bullish order block. It is a bullish order block because it is the last green candle that caused the bullish movement. I will shortly show you how to identify it properly, don't worry. And if you want to know more about the smart money concept, you can watch all the videos in this particular playlist. So let's go to the next thing, that is break of structure and a change of character. On this particular chart, I decided to map out break of structure and a change of character just to explain it to you. So we have a downtrend. In this case, we can see break of structure whether in a downtrend or in an uptrend. This is a downtrend where we have series of lower lows and then lower high. We see willingness in this trend to continue movement. That is simply a trend continuation. And at every point, we map out our structure by identifying the tail. You can see the tail, this tail, and then price push into that tail to create a new lower low. At this point, we say to have a break of structure. We identify our structure by mapping the tail, and then we can say we have broken structure when we see the body of the candle push through that level. Then we have another new structure that was created. We map out the tails, and then we have the body pushing through that. That is when we can say we have a break of structure. We can see this happening. We have a tail, we have the body pushing down, and we are creating new levels at every point. The only time we had a change of character, which is also known as market shift, is simply like a reversal from this particular trend. When you have a downtrend and then you suddenly have a reversal, then the market turned to an uptrend. Right here we have a lower high, we created a lower low. From the last lower low, we did not create anything. We actually saw the market turn to this side, and then it took out the last lower high that was created. Look at it at this level. The lower high that was created was completely violated, and then that is when we can say we have a change of character. From this level, we know that we have a shift in market movement or market direction. So this is it. It is a change of character. And then from there, we see a higher high, a higher low, higher high, and a higher low. We are seeing a shift in the direction from a downtrend to an uptrend. So this is how to identify this. You can find a full tutorial on this same playlist. You can find them, or you can just click on the link that is displayed. So let's go through the checks we need to do before we use this strategy for trade entry. The first thing, if you want to use this particular strategy, is to do your analysis and identify your market structure. What does that mean? It means that you need to identify what market condition you have at that point. If you have a downtrend or an uptrend, or you can simply identify whether you are in a consolidating market. Once you're able to identify that, the next thing to do is to map out the most recent order block. Now, to do that, you will need two time frames. The first time frame is the time frame you will use to map out that order block, and then you will use a lower time frame, at least 2 time frames lower than the time frame you are using. That means if you're using 4 hours, you can use 1 hour for your trade entry. I'm going to show you that shortly. Now, look at this. You identify your order block in, let's say, 4 hours, and then you jump down to 1 hour for trade entry. If you're using 1 hour, you identify your order block in 1 hour and jump down to 15 minutes for your entry. This is so that you can find the perfect entry. Let's go to that and then I will show you how it works. If you can see this chart, the first thing I did was to identify my order flow, that is to identify my market structure. I have a breakup structure here, price retraced to this level. Look at it. And then look at what has happened here, an order block. The last bearish candle, that is the red candle that printed before this green candle pushed above it. We have this order block mapped out. You can map out your order block by mapping out everything from the tail to the body. That is how you map out your order block. After you see this market pushing to this side, because this red candle was what caused this movement. That is why we call it a bullish order block. So the strategy usually works when we see this happening and then we expect price to retrace back and touch this order block before we can activate our trade. How to activate that trade is what we use this strategy for. It's called an order block in an order block. So let's go down to the next time frame where we can identify our entry. Just like I told you, you need 2 time frames. That is, if you're using a 1 hour, you need 15 minutes. If you're using 4 hour, you will need 1 hour. If you're using the daily time frame, you will need the 4 hour for your entry. So we go down to the 15-minute time frame. Now look at what we are seeing in the 15-minute. Remember, in the 1 hour, we map out an order block. This was the order block we mapped out. And we are expecting price to retrace to the order block before we can activate our trade. Now, we don't just activate our trade because look at what is happening. In the 15-minute, do you know that this movement from here to here was an entire downtrend? We can see a lower low, lower high, lower low, lower high, a lower low. And the rule of trading is that you don't trade against the trend. So for you to be able to trade carefully with this, you can see breakup structure, and then we have a change of character in the lower time frame. This is the only time we can say that our lower time frame is trying to adjust and synchronize with our higher time frame. Our higher time frame, that is our time frame of reference, that is our time frame of analysis, is an uptrend. This is the retracement is a downtrend. How do you know that the downtrend has finished? The only way to know is when you see a change of character, when we take out the last recent lower high that was created. Look at the lower high that was created here, and then we took it out. Remember, you identify it by mapping the tail, okay? And then we have the body push through it. Now, anytime we see a comeback to an institutional reference point, in this case, an order block. Remember, an order block in an order block, that is the name of the strategy. Look at it. It retraced back to that order block in the lower time frame, a bullish order block in this case, this red candle. I mapped it out and then price came and touched it. This is when you can activate your trade. Once you are able to activate your trade from here, you can see this thing work like a magic. Your stop loss is always below this time frame. Now, if you're using the higher time frame to enter, you may probably put your stop loss here. To me, this looks really over-risking. So to reduce my risk, I go to the lower time frame and use the order block in the lower time frame to put my stop loss right below this red candle. You can see this red candle right below it, and then my entry is here. Once I see price touching this order block, you can use half of the order block as mean threshold to enter. That's if you have a very huge order block like this one, and you can use just the tip of it if you have a very small order block. So with this simple information, you can actually make a lot of profitable trades in the market. Let's check another example and see. This particular one, we see a price coming down to this level, and then we had an order block. This level is our order block. It is also a bullish order block. At any time we map out our order block, let's assume we did not see this. We can see this order block that was mapped out. Price coming back to touch this level is where we can enter trade. But how do we enter? How do we know that this will work? We now jump to the lower time frame. This is a 4-hour order flow. Don't forget, it is our time frame of analysis. Then we jump to a lower time frame, that is our 1 hour. That is our time frame of entry. Look at it. The retracement we saw, a lower low, lower high, lower low, lower high, and then we could not make any lower low. But instead, we had a change of character. We took out this level, the lower high that was created, and then price came back to this particular order block. This was the last red candle that was traded to the downside before the upward movement. Price came back to it, and this is our entry. How amazing it is to use this particular information to take trade. An order block in an order block. We have an order block that was our higher time frame order block, and then we have a lower time frame order block. If you use this information alone, I am assuring you, you can make a lot of fortune in the market. So to use this strategy, make sure you practice it. Once you see another block in a higher time frame, jump down to the lower time frame, at least 2 time frame below that, and then look out for your entry. Once you see a change of character, look out for an order block in that particular level, and then you're good to go for that particular trade. I wish I can show you more examples, but you can do that by yourself. Go to your chart and check how to use this particular strategy. You want to learn more about the smart money concept, this is the right place for you to be. I am trying as much as possible to simplify these things for you, and then you can have the luxury to trade with this kind of information. Make sure you give this video a like, and remember to subscribe if you find value in this video. See you in another video.